Did you know StarkNet is so complex, even some developers say it feels like building on alien technology? Powered by cryptography that Vitalik Buterin once called moon math, it's one of the most ambitious Layer 2 projects trying to scale Ethereum, but also one of the hardest to use. Today we break down StarkNet and whether it deserves a spot in your portfolio with a final score out of 100. But remember, this video is not financial, tax, or legal advice. Always do your own research. Team and development. StarkNet was created by Starkware, an Israeli tech company founded in 2018 by cryptographer Eli Ben-Sasson and Yuri Kolodny. They're known for helping Ethereum scale using Stark proofs and also built StarkX, used by platforms like DYDX, Immutable, and Sorare. Their main project, StarkNet, was launched in November 2021, and even though they've raised over $260 million from big names like Paradigm and Sequoia, growth has been a bit slow due to the challenge of learning their custom coding language, Cairo. Score 8 out of 10, use case and utility. By utilizing zero-knowledge rollups, StarkNet bundles multiple transactions into a single proof, a quick way to confirm they're all valid, which is then verified on Ethereum's mainnet. This approach not only alleviates congestion, but also retains the robust security of Layer 1. Developers can build decentralized applications that are both scalable and secure. Notably, the gaming sector within StarkNet has seen exponential growth, with projects increasing from 4 to 51 in just a year, highlighting the platform's potential in hosting complex, resource-intensive applications. Score 9 out of 10, Tokenomics. The native token, STRK, plays a pivotal role in StarkNet's ecosystem. With a total supply of 10 billion tokens, the allocation is as follows: 17% to Starkware investors, 32.9% to core contributors, and the remaining distributed among community provisions, grants, strategic reserves, and the treasury. STRK serves multiple purposes, including governance, participation, transaction fee payments, and in the future, staking to decentralize the network's sequencer. While the structured allocation aims to balance development incentives and community engagement, the relatively high percentage reserved for core contributors and investors raises concerns about potential centralization and market manipulation. Score 6 out of 10. Hype versus fundamentals. The buzz surrounding zero-knowledge proofs and Layer 2 solutions has positioned StarkNet in the spotlight. Unlike projects that ride solely on speculation, StarkNet's foundation is built on solid technological advancements and a clear vision for scalability. However, the reliance on the Cairo programming language has introduced a steep learning curve, potentially hindering widespread developer adoption. Efforts like the Decentralization pilot program and Basecamp educational initiative aim to mitigate this by incentivizing and educating developers, but their long-term impact remains to be seen. Score 8 out of 10. Market liquidity and volatility. STRK liquidity remains relatively shallow, meaning large trades can significantly impact its price. Since launch, STRK has experienced extreme price fluctuations, peaking at $2.75 before dropping to around 15 cents, reflecting early speculative hype followed by a sharp correction. As more tokens unlock and market dynamics shift, further volatility is expected, especially as trading volume fluctuates based on network adoption and investor sentiment. While STRK's liquidity is moderate but improving, its price remains highly volatile, making it a risky asset in the short term. Score 6 out of 10. Security and decentralization. The ZK-Rollups are widely regarded as one of the most secure scaling solutions. This cryptographic method ensures that transactions are both private and verifiable. However, the current architecture sees Starkware maintaining considerable control over the network's operations, particularly the prover component that creates cryptographic proofs. While there are plans to transition towards a more decentralized framework, the present centralization poses risks related to single points of failure and governance concentration. The roadmap includes initiatives to decentralize the sequencer and prover, but timelines and execution remain critical factors. Score 6 out of 10. Network activity and adoption. STRK has secured listings on multiple centralized exchanges, ensuring traders can buy and sell the token with relative ease. Also, the StarkNet ecosystem has witnessed remarkable growth, with the number of projects increasing by 168% in 2024 from 72 to 193. This surge is largely attributed to grant programs and infrastructure optimizations that have made the platform more developer-friendly. The gaming sector in particular has flourished, positioning StarkNet as a hub for on-chain gaming innovation. Despite these advancements, user adoption still trails behind other competitors like Arbitrum and Optimism, indicating room for growth in attracting a broader user base. Score 8 out of 10. Scalability and Technology. StarkNet uses ZK-Rollups to deliver fast, low-cost transactions, and its Sharp system cuts fees further by combining multiple proofs. At first, its custom language Cairo was tough to learn, but Cairo 1.0 made things easier with a Rust-like structure. Now, to bring in more Ethereum developers, StarkNet is adding support for Solidity apps through Kakarot and EVM built in Cairo. This makes it easier to run familiar smart contracts and is expected to boost adoption across the ecosystem. Score 9 out of 10. Regulatory risks. Regulatory scrutiny remains a wild card for StarkNet. While its use of zero-knowledge rollups raises some privacy concerns, its focus on scaling rather than privacy may offer some protection. However, ongoing uncertainty around Ethereum scaling solutions means compliance rules could shift. Starkware's current centralized control also poses a risk. Failure to decentralize governance could attract regulatory attention. Score 8 out of 10. Self-custody. As with any cryptocurrency, self-custody is a fundamental principle of security. By keeping your private keys in a secure wallet, you ensure that only you can access your funds. To achieve self-custody of your StarkNet assets, start by setting up a non-custodial wallet like MetaMask or Argent, both of which support StarkNet. For added security, consider using a hardware wallet like Trezor to store your private keys offline, further reducing the risk of hacks. At CryptoVagabonds Academy, we empower you with the knowledge and tools to secure your crypto assets and take full control of your financial future. Whether you're new to self-custody or looking to enhance your security practices, we provide practical guidance on safely storing your funds. Don't wait until it's too late. Join us today and gain the skills needed to navigate the crypto space with confidence. Score 6 out of 10. Final thoughts? StarkNet is a powerful scaling solution with a strong foundation in cryptography and Ethereum's ecosystem. Its ZK-Rollup technology is solid, but the project still faces challenges in decentralization, developer adoption, and liquidity. While it has massive potential, its ultimate success hinges on its ability to transition to a fully decentralized network and expand its developer base. Final score, 66 out of 100. Is StarkNet a game changer or just another layer 2 competing for relevance? Let us know in the comments. And if there's another project you'd like us to analyze, drop it below. See you in the next one, and as always, stay curious and stay hodling.